Hi, George. Thank you very much for joining us today. How are things in Vancouver?
Things are really good. Weather's still great. We're moving into fall, but blue skies and perfect weather.
Yes, fall is an amazing time to be in British Columbia. George, Eldorado recently announced the key development at your Skouries project, and that is the credit committee approved mandate letter for 680 million euros. And I want to discuss this and exactly what it means for the construction of Skouries. But before we do that, why don't we just start with a brief overview of Eldorado Gold for those viewers who might not be familiar with the company?
Sure. So Eldorado is a diversified portfolio of long life, high quality assets. For those not familiar with the company, we have 4 operating mines in key jurisdictions: Turkey, Greece, and Canada. And our main production is gold, although we have byproducts in silver, lead, and zinc. And with Skouries, we'll be adding copper to the portfolio. And we currently have 15 million ounces of proven and probable reserves and a big exploration program to continue to grow both our resources and our reserves. And I think the thing that sets us apart from many of our peers, we're a growth story. We have a strong pipeline of growth projects, both from our 4 operating mines as well as our development projects in Greece.
So that's a great overview. I want to move on now and spend a little more time on your various operations, beginning with Kisladag. That's your largest producing mine. You produced 170,000 ounces there in 2021. Can you just provide a brief overview of this mine in terms of production, also your cash costs and your all-in sustaining costs, and just how things are producing or progressing overall this year?
Sure. So Kisladag's a flagship operation for us. It's an open pit, heap leaching mine. In 2021, we had a strong year. In this year, first quarter, we had a slow start. We were impacted by COVID absenteeism. We also had a pretty tough winter in Turkey. And as a result, we had a soft Q1. We've been ramping up since then, solid Q2. We're set up to have a lot stronger second half than first half. And really our focus here has been on capital and improving the efficiencies of this operation. So at the end of last year, we commissioned a high pressure grinding roll. It's essentially an improved crushing facility that will crush the rock finer, expose more gold, and therefore deliver higher recoveries. And with that new crusher commission the end of last year, we're focused now on agglomeration. In agglomeration, we're basically adding cement to the stacked ore in order to bind the fines together to maintain permeability on the heap. And by having a finer crush and a good agglomerated ore, we can then irrigate solutions through and push that recovery to what we're now budgeted and forecast to do is 56% gold recovery. So far, all of our work is indicating that 56% is deliverable and we're on track. But we're not happy with this. We're focused on even further improvement. And the work on agglomeration has shown us that, number one, we can crush finer with this new crusher. And with good agglomeration, we think we can even get the recoveries higher. So as a result, mid-year, we announced that we're investing in an agglomeration drum. And essentially with that drum installed in the crushing facility, it'll give us the ability to crush the rock finer, to agglomerate the ore effectively, and maintain that permeability. So we're doing all the test work to determine ultimate recoveries with this new circuit, and look forward to positive updates on Kisladag's future as we approach 2023.
Your second producing mine I want to discuss is Lamac, and that's an underground mine based in Val-d'Or, Quebec, which translates into Valley of Gold. So that implies there's a lot of gold in this area. But maybe you can just provide an overview of this mine in terms of annual production and also your all-in sustaining costs.
Yeah, so Lamac's our newest operation. We acquired it in 2017. It's been a huge success story for the company. We brought it into commercial production within less than 2 years of acquisition, and we've been growing the reserves and the resources since acquisition. In the maiden feasibility study, we had a peak production level of 130,000 ounces per year. We're now peaked at over 200,000 ounces a year. We've made a new discovery since acquisition. We call this discovery the AuEq deposit. And the AuEq deposit essentially is a separate deposit. And we just late last year in December completed a drift or a decline between our mill, our Sigma mill, and our Triangle Underground mine, where all our production's coming from. And this decline runs just adjacent to the AuEq deposit, so it's well positioned to put into production. The next step is to be able to convert the inferred resources to reserves, and that'll allow us to extend mine life at the Lamac operation. Again, it's a solid producer. It peaks at about 200,000 ounces a year, and we believe we'll be able to extend mine life here with our strong exploration programs.
And George, maybe you can just give us a timeline associated with that. How much more work do you have to do, and how long would this work take before you can actually bring AuEq into the mine plan?
Yeah, we have a long section that depicts this pretty well. We on our long section, we've got historical gold that had been mined over a couple of decades on the right side of the slide, and on the left side of the slide, we have the Triangle deposit where our production, our current life of mine comes from. And right in between the two is this new AuEq discovery. So in the second quarter, we completed an exploration drift off the decline, and we began the infill drilling. We should complete the drilling before the end of 2023 to give us the required drill density to then convert this into a reserve. Now, we've done the engineering studies. We have a PEA that went out in the second quarter of this year. So we're well positioned to understand the engineering capital infrastructure required. Really, the focus now is the detailed drilling to give us the confidence to be able to call it a reserve. And right now, our expectation is to be able to announce a maiden reserve on this late in 2023.
So your third asset that I want to touch on is Skouries, and there was some big news that came out in Q3 on this, and I want to do a deeper dive on it. But before we do that, why don't you just provide us with a brief overview of this asset and maybe just highlighting the high points from the feasibility study, the net present value, the IRR, CapEx, et cetera.
Yeah, Skouries is a transformational project for Eldorado, and the feasibility study was completed in December. It has robust economics. The capital cost to complete the project is $845 million. The IRR is 19%. The payback's less than 4 years. One of the unique things about this mine is that the copper will cover all the operating and sustaining capital costs. So it has a negative all-in sustaining cost of negative $17 per ounce. And it's going to produce, on average, over a 23-year mine life, 140,000 ounces of gold and 172,000 ounces of gold equivalent coming from the copper byproduct. And now all these economics I just cited are assuming a copper price of $3.85 and a gold price of $1,500 an ounce. So, right now, gold price is quite a bit stronger than our assumed price, and copper slightly below those assumptions. At any rate, this is a long life asset, high quality assets, really going to change Eldorado and provide a heck of a lot of cash flow to our shareholders.
And copper seems to be becoming more and more important for gold producers.
Copper's a unique metal in that, the planet is focused on decarbonization. Copper is going to play an important role in that journey as everybody focuses on clean energy. And so although we're kind of going through a global economic crisis, I think copper is going to have a strong run for the next decade as those focuses on clean energy continue to unfold. And so, yeah, as a gold company, having an asset that has a nice byproduct in copper, it's definitely going to be a strength for our organization.
George, you mentioned that it will cost $845 million to complete the construction of this. So financing is a very important issue here. And as we mentioned at the onset, you recently announced an important milestone in the Skouries financing process, which is a credit committee approved mandate letter for 680 million euros with Greek banks. And some investors might not be familiar with a mandate letter. Maybe you can just provide an overview of what exactly it is and what it means for this whole process.
Yeah, this is an important milestone for the company. Getting this approved, this mandate approved with the Greek banks, signals that we're getting close to having financing in place. That financing package will cover 80% of the required funding to complete the Skouries project. We've essentially agreed on key terms. This is non-binding at this point, but to give you an idea of the depth at which we currently sit, the term sheet that went along with the mandate letter is over 50 pages. So we've discussed a heck of a lot of the issues. What remains are finalizing the key commercial terms. This is going to be a key focus for Eldorado, and we're expecting to be able to close the financing by the end of this year.
50 pages, that must be a very detailed letter.
Yeah, I mean, both the banks and Eldorado wanted to hammer out the key terms before we dived into the detailed documents. So I think we're pretty well positioned to get this finalized before the end of the year.
So best case scenario, you get it finalized by the end of the year, and then what are the next steps?
Well, really, it's getting the approval from our board to finalize the financing and to approve the full construction of the project. And so, you know, we remain pretty darn confident. Our feasibility study was completed in December of last year, and we believe that the capital cost in that feasibility study is still solid.
And so I just want to get a timeline associated with this. Best case scenario, when could you actually move ahead with the construction?
Yeah, we're poised with the team in place to start construction right after approval in the new year.
George, there's been a lot of examples of capital cost inflations with some of your competitors. How comfortable are you in the Skouries capital estimate of $845 million?
Yeah, we're quite comfortable with our capital cost estimate from our December feasibility study. And there's a couple of distinctions about Skouries that sets us apart with those companies that have been struggling with inflationary pressure. Number one, the main equipment in the processing facility is not only purchased, but it's already in place. So crushing, grinding, flotation, concentrate regrind, all the main equipment associated with that part of the processing facility has been installed. In fact, over the summer, we've been putting up the mill building and the cladding or the siding on the facility. The open pit's already been pre-stripped and the ore body is exposed. So, you know, those parts are largely de-risked. One of the key things this year that gives us further confidence that our capital cost estimate is solid is that some of the work yet to be completed is we've committed to dry stack tailings. That means we're going to remove the water from the tailings and convey kind of a damped sand into the valley below. So in order to do the dry stack, we have to purchase these large filters that will remove the water from the tailings. And that's the last major piece of equipment to be procured. So we went out for tender in the second quarter of the year. We finalized a contract with the supplier, and the cost for those filters came in slightly below our feasibility study cost estimate. So that was a really good sign for us that our estimate's still solid. Another indication, there's still, you know, a lot of construction to be done on the tailings dam itself. We're building a lift on a tailings facility for Olympias. You know, it's within 15 kilometers of Skouries, and the productivities and efficiencies we're seeing on that construction activity is consistent with the assumptions we have on Skouries. And so, you know, there's a few indicators that are telling us that we're still in solid shape relative to our feasibility study.
So that's a great overview of Skouries. I want to move on now, and I want to discuss exploration. Of course, is a very important element of any mining company, but maybe you can just give us an overview. You just recently released a press release on exploration, but maybe you can give us an overview on how you're going to allocate your budget this year.
Yeah, our exploration guidance for the year is $44 to $48 million expenditure, and it's about 53% expensed and 47% capitalized. And breaking that down across the jurisdictions, we're doing a lot of drilling. In Canada, we have 112,000 meters of planned drilling, and that includes 22,000 meters of resource. In Turkey, 67,000 meters of planned drilling. 38,000 of that is resource conversion at Efemçukuru. And in Greece, we have about 27,000 meters of planned drilling, including 7,000 meters of resource conversion drilling. So, and that's at Olympias. So we got a pretty robust exploration budget. More than half is focused on Canada, and we've got a large land package, and I think a long runway ahead of us. And AuEq is the next step in terms of growing our reserves and extending mine life. And, you know, the other thing I would say is Efemçukuru has been a really steady producer for Eldorado since startup. And we have inferred resources that we're currently drilling on, and think we've got a good opportunity here to extend mine life of this very steady asset. And in Greece, again, for Olympias, we're doing resource conversion drilling. Our exploration announcement that just came out shows some fairly exciting new intercepts close to surface, not too far from infrastructure. And so we'll continue to pursue these opportunities at Olympias in this Stratoni corridor in Greece.
So as you just mentioned, you have a very large exploration program going on, and you have a lot going on at your various operations. So why don't we move on and discuss financing and your balance sheet? How much cash do you have on hand, and how will you allocate that cash in the coming year? Are you going to focus on CapEx or dividends or buybacks?
Yeah, for Eldorado, I mean, maybe starting with our liquidity position, the total liquidity is $620 million at mid-year. That's $370 million in cash and $250 million in an untapped revolving credit facility. So we're well positioned on the balance sheet side. And I mentioned for Skouries, 80% of that project we're anticipating financing through Greek banks. The remaining 20% would come off our balance sheet, and so we're well positioned to be able to deliver on that. And so when you look at our debt, we have $500 million senior notes at 6.25%. And so we've got a good runway to be able to get the growth in our existing 4 mines delivered over the next 5 years. And while we're doing that, get Skouries completed and in construction. That's about a 2.5-year project in order to get it into initial production, and about 3 years to get it into commercial production. So we're well positioned within our 5-year guidance to make the material change in our production, a material change in our unit cost, and a material change in our ability to deliver free cash flow. And so once Skouries up and running, we'll be in a position then to look at share buybacks or dividends.
George, you just gave us a very robust update on your various operations and what's happening, and you're making great progress at Skouries in Greece, and yet you're still trading at a significant discount to your comps. What are you and your team going to do to help unlock that value in the coming year?
Yeah, for Eldorado, our price to NAV is definitely below our peer group, roughly half our peer average. And that disconnect is solely due to Skouries and our growth in Greece. And so, we're locked on changing that. It's get the financing in place by the end of 2022, put it into full construction in early 2023, and deliver a project on budget, on schedule in 2.5 to 3 years. And so that's going to remark Eldorado. We'll become a large generator of free cash flow, and you're going to see that PNAV improve dramatically against the peer group. And I think that just is a unique opportunity for shareholders to take advantage of a re-rate of Eldorado as we deliver on the Skouries project and our growth across our portfolio.
And George, before we wrap it up, you and your team were recently at the Denver Gold Forum last month, and I'm just kind of curious, what was the mood like there? And I'm sure you met with numerous institutional investors. Maybe you can tell us what sort of feedback you got from them.
Yeah, I mean, it's been a significant change. So Eldorado presented a year ago at the Denver Gold Forum, and it was a hybrid event. So a significant change in the number of companies that were there this year. It was a full plate of companies. I would say off the mark from historical norms in terms of the investors. We were quite busy. We had a full docket of meetings during the event, and so we were pleased with that. And I'd say the mood is trying to get some excitement from the generalists. And again, I think our sector is going to show some good opportunities as the overall global recessionary fears step away. And I think Eldorado is well positioned within the peer group to deliver value to shareholders as described in this discussion.
George, as we wrap up, what can investors expect in terms of news flow from Eldorado Gold in the coming months?
Well, at Eldorado, we're focused on delivering our operational guidance for 2022. And as I said, we're going to have a lot stronger second half than first half. And beyond that, it's our growth. And so in Turkey, we're focused on throughput and recovery improvements at Kisladag. At Efemçukuru, it's resource conversion of the Kokar Pınar and Batay veins, which can extend the mine life. Kind of swinging over to Canada, our focus here is on the resource conversion drilling on our Lamac. Again, that's going to evolve at the end of 2023. We believe we'll announce a maiden reserve late in 2023, and that'll have a material impact on the value of Lamac. And in Greece, it's really the transformational opportunity of getting Skouries financed and in full construction and ultimately into commercial production. So a lot on our plate and a lot of opportunity for the company and for our shareholders.
Well, that was a great overview, George, and a great update on Eldorado Gold, and we look forward to further announcements, especially at Skouries. But I want to thank you for making time for us today.
I appreciate the opportunity.